Hello everyone, let's get started. I'm going to kick off this video here. The goal is to update you on the current market scenario and the upcoming movements. What we can observe looking at Bitcoin today, we can observe here after this downward movement, right? We had the formation of a boss. It's to be a valid boss. After this information, we have an accumulative range, right? The video, which started to accumulate liquidity in graphical figure format, there were even some small liquidity sweeps, but it was nothing that interesting. We still have a lot of internal liquidity to be swept. Maybe we can sweep the liquidity from these tops, mitigate this type of daily chart, make a flow alignment for us to start the downward movement. It would be really interesting if there was this movement to sweep that internal liquidity. Okay, so there is liquidity in these regions that has not been wiped out. However, I believe that if the price comes to sweep that liquidity in the 107,000 region, it will probably renew the all-time high. Because above the all-time high, from last month's high, there is much more liquidity than in this region. Here. So, if there is this sweep here, it's likely that the price will also sweep the liquidity from the all-time high. The ideal here would be for the price to sweep and this internal liquidity of this downward range, because we had the formation of this range here. The price sweeps and this internal liquidity which was formed mitigates the external dust, because we would even have internal dust if we were to look at the hot zone. However, our context here would give us a view that our internal setup, would be the daily setup, would be more interesting. Well, then the price could sweep that liquidity, mitigate this setup, start the downward movement. It's one of the possibilities I see for Bitcoin, right? Bitcoin, it still has a lot of liquidity to be swept at the lows. Okay, I believe that for Bitcoin to continue with the macro structure, we need to look at the weekly chart and then the daily chart. I still believe that it needs to sweep the liquidity from last month's low, which would be around 88,900, to mitigate the region here. And on the previous chart between 83,482, that's where we're going to see a flow alignment. After this liquidity sweep, the price would manipulate below that low, where there are a lot of stop losses in that region. He swept a lot of positions, right? Buying in these regions, placing stop losses here. So it would be interesting for the market to manipulate below these regions and align the flow for a rise. We could catch some really good trades in these regions. Alright, so that's what I'm observing. There is also liquidity below last week's low. So what can we observe for Bitcoin, right? Bitcoin managed to sweep the liquidity from that accumulation in the micro, looking at the 15-minute chart. Did it sweep that liquidity? It mitigated that order block, okay? In other words, we could, right? Let's move to the 15-minute chart to see if there's a really interesting structure. Look at the chart. It swept those equal lows, right? We know that at equal lows, there's usually a lot of liquidity below because retail traders buy in those areas and place their stop losses underneath. So the market came in, swept that stop loss and mitigated order. The block started this upward flow, right? What we can observe is the following. We had, right, formation of a shock here, reversing the flow on the 15-minute chart. And we could, yes, sweep that internal liquidity that was left. We could look at this liquidity like this, or the price would sweep it. This internal liquidity could, yes, mitigate that type there, right? On the 15-minute chart, we even have the point of control of that accumulation by the volume profile in this region. So we could, yes, sweep that liquidity and place a stop loss below the low there. If I have what profit would be in the liquidity. It's from the 4-hour chart or the 15-minute chart. It would be interesting if the market did this alignment. It would be like that since the 102,000, right? It's quite risky, you see, so you're really taking a risk because we wouldn't have the macro and the mini micro is well aligned. I wish the price had swept the liquidity from the market's low. And today, to get a long setup, that didn't happen, right? So it would be a liquidity sweep. Looking at the 15-minute chart, a lower time frame. I usually like to trade the 4-hour and 1-hour charts, but this setup would be valid for anyone who wants to trade. Anyone willing to take a risk could go for this setup. Yeah, but looking at the macro context, right? Or a context, More clearly, the ideal would be to sweep this liquidity, mitigate this point, and for us to take a short right and sweep the liquidity either from the week's low or from the previous month's low so we can take a long right. It would be a setup more aligned with the HTF. That's what we can observe for Bitcoin. Is the moment okay? And this long would be a long. And looking at the 15-minute chart, the stop loss should be placed below that low, below the order block. Let's take a look at Bitcoin, Ethereum. Bitcoin is accumulating. You can see a clear accumulation river here. This is even forming the chart pattern, right? This chart pattern, it leaves liquidity both below and above, so we expect liquidity sweeps and flow alignment. Right now, you could trade this. It's asking for the minutes I gave you because outside of that, we don't have a clear view, okay? We would just have a really boring market accumulating. Slow, right? Let's see how Ethereum is doing. Until more inside than Bitcoin. So, a really ugly movement, right? It's a really ugly market, and what's happening here is the same thing. The market is accumulating liquidity in the same way, both at the highs and the lows, meaning there's liquidity above and below. We have to wait for a sweep. It even swept liquidity yesterday along with Bitcoin here, but it's a really ugly structure. There's a strange volume coming out, very low volume. But looking at a macro context, I'm not going to read it for you here. The daily chart, and for you to see that we have here, it's Bitcoin. Or are you serious about that? Unlike Bitcoin, it will see external liquidity, okay? It will see what the liquidity of these funds is, right? It broke, right? This order block. It violated actually, right? It swept the liquidity below it, so who traded, right? Whoever opened a trade in this order block left their stop loss below, got liquidated as well. Hit the stop loss. So what we would have is the following. We have a downtrend range. It's pretty clear we had a structure break with a change in character. The price came in mitigated. The hot zone broke structure again, forming a boss. After this formation, here the price did. The pullback mitigated there in the hot zone again and broke it once more. So we had the formation of this boss, and we can measure where our next hot zone would be. In fact, the price has already reached this area through that large candle that was left, but in my interpretation, it would be the internal liquidity of this last range that was formed. So what could we see? We could see Ethereum sweeping that internal liquidity and mitigating, or the region of 0.79 of FIBO, or this BPR, along with the key weekly level that was left. We also have a daily order block that swept the liquidity of that accumulation, so the price could mitigate that area, starting the downtrend and start the downtrend movement. For us to be able to get along on Ethereum, I see that we have a lot of liquidity. Even looking at the heat map in the region of 23 and 50, which would be the low of that last aggressive uptrend we had, well, then I would like to see, right, the price sweeping liquidity below this bottom that was left. The price would sweep liquidity below that region. It would mitigate, right, our key level, make a flow alignment here so we can catch a lot. There's the ethereal. It's actually interesting to accumulate, right, guys? The market sports, especially if it goes back into this area here between 2400 to 2480, but the best area for me here would be between 2300 to 2100. So we're looking to accumulate a long setup there to catch. Looking for a short setup, the ideal would be to sweep that internal liquidity and mitigate our order block, our BPR, right? Even the 0.79 of Fibonacci, right? The short setup would be from 3100 to 3000. 3300 is 3 without 3300. We have an order block. It's interesting here in this region of 3600, but I believe that the price is far from reaching this region, right? Ideally, the price would reach that area and do a downward flow alignment to confirm, right? That could initiate a downward movement because there has been a lot of liquidity sweeping at the bottom. So, for me, you're saying it would be really interesting if Ethereum came down to this region of 2350. I would stay. Be very careful if you come to this area to catch a bus, because generally when the market makes an aggressive move, it tends to accumulate. It tends to accumulate in these regions and then form a bullish structure, right? To mitigate liquidity, to sweep the internal liquidity that was left. But that's it, guys. We have a pretty complex setup, current, okay? It's a scenario, it's quite delicate for us. You have to trade with a lot of caution and wait for confirmations, okay? And that's it.